Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. As always, I have my great friend. He is the smart person of this whole operation, Mr. Al Connickson. Mr. Al Connickson, how are you doing today?
You know what? I am doing fantastic. I almost think that you put something on this mic that is not legal or something. I always feel good when we do the show, Josh.
Well, you know what? We'll keep that to a different show, but it's always
right.
It's always great to be back, helping our Retire Young family make better investing decisions. And Al, with this market that we're seeing right now, we had a few weeks, and we've been talking about this over the last couple months here. We had 4 consecutive weeks that were up. They were down. And then we've seen a couple that were coming back a little bit, but really what we're seeing is a lot of volatility in the stock market, which is actually a really great thing for traders and investors. So it doesn't matter what the market does. You just want it to move. And we're going to talk about some of those things today, how us as average investors can participate utilizing these markets, how we can participate in stocks, options, futures, Forex, in our retirement plans. Before we do that, Al, I want you to recap what's happened this week. We're seeing great volatility once again, and it's a broken record, but how can we get started as the average investor and take part in these great opportunities that we're seeing?
First of all, we need to understand that these big movements up and down are really good things if you're properly educated. If you know the right strategies to be able to take advantage of them, that's really what we look forward to as traders. So especially if you're looking at short-term income, taking care of the needs you have right now, this kind of movement is really what is needed, what we look forward to, as I mentioned before. And I think that we're going to see this volatility continue for a while because this is the beginning of earnings season, for this quarter.
Yep.
And earnings always seem to provide the movement that we're looking for. Right now, the economists are expecting about a 20% decline in S&P earnings. So what we're going to look for are some surprises, and that's really what kind of moves the market during earnings season.
Well, the funny thing, too, Al, is you see good earnings, and sometimes the stock goes down.
Sure.
You see bad earnings, and sometimes the stock goes up. So
Right.
it's kind of confusing a lot of investors.
Well, and that gets down to, I'm glad you mentioned that, because it really gets down to what we always say. You don't try to do what you think should happen. You can't think the market to do what you want it to do.
Oh, I thought I tried that one time. It just did not work.
It just doesn't. You got a headache but trying to do it
Sure
too,
did.
didn't you?
Yeah.
No, you can't do that. So really, you just follow what's happening. Follow who is really moving the market. That's the important thing.
So who's really moving the market?
It's the big players. It's the pros. It's the smart money. Companies like Goldman Sachs, people like Warren Buffett, the big hedge funds. And it's important to also understand that nobody can promise that you're going to be successful. But what we can do is help you improve the odds that you can be.
Yeah, minimize mistakes.
Exactly. Yeah, the best anyone can do really is to help you with odds. Have the odds or the probabilities in your favor, giving you an edge over the other traders and investors, and then achieving the knowledge and the skills to preserve your assets if you're wrong, and then know how to realize and protect your profits if you're right. So, the goal really is to work towards a point where you take a small risk with the chance of benefiting in a desired and an acceptable way. Basically, what I'm saying is you maximize the rewards and minimize the risk. That's the goal of every trader and investor.
Yeah, I'm glad you brought that up because everybody has different needs, right?
Correct.
And that's why it's important to have a plan. And I know we're going to talk about that plan in probably the 4th segment here today. But when you have those needs and you put a plan together, you just want to follow that plan.
Right.
And you mentioned the big institutions, the smart money we call it. They're the ones that are moving the markets, and it's based off of supply and demand.
Correct.
So just kind of explain how that really works in the financial world.
Yeah, well, it works in anything that has to do with finances. The relationship between supply and demand is what moves prices. And in the trading and investing world, what we're looking for is the engine that drives price movement in the stock market or any other market, whether it's futures or Forex or options. And that engine really is the activity of the large institutions, the big players. They can do that because they have the money to do it. They have the clout, the financial clout. Maybe they're investing tens or hundreds of millions of dollars in a day or a week. That's enough to change that relationship between supply and demand. And what we're talking about in the financial markets are buyers and sellers. And it's the big buying activity that is going to do what? It's going to move price up. And it's the big selling activity that will do the opposite. It will move price down. Those are the important things to be able to identify. That's what's going to give you a good quality trade. It really, if you can identify in advance where the buys are, where the sellers are, those large amounts, that allows you to do what we call, or having what we call a quality trade, the highest probability of it succeeding with the highest profit potential. Those are really the two key things. If you can do that, if you can increase the probabilities of success, increase the profit potential, that's really what should be the objective of every trader and investor.
Yeah, you're correct. I mean, you were talking about the buyers, but also the sellers. And a lot of people are just probably thinking, okay, well, I can only participate in one direction. Well, that's pretty true for the uneducated. There's markets that go up. We know they go down,
Sure.
but they also go sideways. So you need a strategy for every market condition. So everybody knows that buy and hold strategy,
Sure.
profit as it goes up. There are strategies that are designed to profit as they go down. It's called shorting, which basically you can sell at a high price and close it at a lower price, and that difference that is the profit in there.
Yeah, it's
And
the opposite of what you do when you're buying something.
you're exactly right. So that's another opportunity that the average investor maybe doesn't even know that you have. Al, we got a packed show here today. Coming up next, I want to get into, I guess, income and how the smart money is creating income using the stock market. Now, there's also other markets out there, the futures market, you mentioned that earlier, the Forex market, and the options market, and how a lot of investors that we're seeing that are coming to these investing classes want to understand how to participate in all, not just the stock market. So also don't forget to subscribe to the Retire Young podcast on Apple Podcasts, iHeartRadio, and Spotify. This is Josh and Al with the Retire Young radio show. We will be right back.